Good morning, degenerates. Welcome to another episode of Boring Crypto IO, place where I read you the boring crypto news every morning, Monday through Friday, just so you don't have to. My name is Not Important, and I am your host, guys. Smash the like button, turn on the bell for notifications, and subscribe to the channel. Let's get... Wait for it. Boring. Ether, ETF verdict. Gensler stays muted. Toolbag. Debt box counters SEC's bid for dismissal. Alleges strategic maneuver. Debt box firing back. Ether staking deposits touch 85 billion, 25% of circulating supply now locked up. Great. When price go up? It's got up a little bit. We'll talk about that here shortly. And last but not least, crypto played little part in Hamas terror financing, says U.S. Treasury. You think? Guys, don't read headlines. I honestly wouldn't believe anything coming out of legacy media, period. This is something we've been saying for quite some time, and now there's finally an article months later that are saying, proving that it wasn't true. All right. To the market, guys. Sorry, still getting over this cold. Whatever the hell I got. So I'm a little stuffed up, a little snotty. It's a little gross. All right, guys, Bitcoin's ripping. The market's moving. We're up 2.5% from yesterday. Market cap sitting at 1.96 trillion. Bitcoin ticking up still just a little bit, 52.6%. ETH dominant 17.2. Gwei, where it's been, 25 Gwei. I'll get you the ETH transaction. And fear and greed hovering at 75. Let's just do it. Go through the top 100, see what the top movers are. The outliers. Bitcoin on the 7-day up 17% basically. ETH right behind it, 15.29 on the week. Outside of that, let's look for anything over 7. Why 7? Because, dude, things have been moving, right? Coffee break. All right, let's rock and roll. Some things starting to show some profit taking, some pulling back, which is to be expected. Mutable X up 7.28% on the day. Guys, Stacks up 13.84. Aptos up 7.8. It's moving around right now. This was just at 8. It's doing some stuff. Woo! Oh shit! VeChain up 28.5% on the day. 55% on the week. Holy, I'm not holding any VeChain. I did last cycle. I had a big bag of it. Got rid of it. Shit. Maybe I should have got another one. Mantle, M&T up 10.12. SEI up 12.89. Helium up 11.49. Beam has been melting faces, up 70% for the week, guys. 8.15 on the day. 8.77 for DYM. 11.64 for BGB. BitGet token. 11.02 for BTT. BitTorrent. Pith down 5% though. 7.07 for Neo. Neo's still around, huh? Are they even a project anymore? I know people could. There's so many dead ghost chains that people can trade, but are they even working anymore? They were like huge last cycle. Or was the cycle before that? Cycle before that. $8.23 upside for Jupe. And AXL, bringing in your top 100, guys. That is it. Let's go to Bitcoin. I don't have a chart pulled up. Why don't I have a chart pulled up? All right, guys. Bitcoin 4 hour, 51,586, holding strong. Getting definitely some resistance here. I mean, look at these candles closing exactly damn near the exact same spot. right here at 52.389. Let's look at it on the 1 hour. We're just going to put a line right there. This might not stay here for too much longer. I might get rid of it if we just blow past it here in the next couple hours, but we're going to put a line right there just for shits and gigs. But that's your range right now in the 1 hour. We are bounced between 51586 and 52401. And with that being said, I was looking. Sorry, I'm pulling up my phone to pull up notes. Totally not prepared today, guys. $54,457 is what I was looking at. 54,457. 5460. That is my next level I'm looking at for us to get to, and potential resistance from there. We'll go ahead and make that red. So keep you guys' eye on that. Those are the levels I'm looking at right now. We've got to break this 52.373-ish. And then my next level I'm looking at is 54,460. If we, let me say daily, we close above this. If we get to close above this 52,373, whatever, I would be looking for the 54,460. What would that be if you were leverage trading? Roughly 4%. 10x, get you about 40%. Can't be mad at that. At that point, guys, unless we just rip, I would strongly be looking for either sideways action or some kind of retrace. Not only would I be looking for it, I'd be hoping for it. Honestly, we need... The 1 hour's telling the story, man. Look at this. Rip. Rip. That's bear trap. Rip. I mean, if we continue on this trajectory, we're going right to it. But yeah, at that point, guys, honestly, I would be hoping, not only just looking for, but hoping for some sort of retrace or sideways movement. Just a cool off period, guys. We have ripped. Bitcoin has absolutely ripped. And it's not the healthiest when we do that. What goes up fast usually used to go down just as fast. The only other narrative right now that I'm kind of picking up on, right? I'm not saying I came up with this on my own by any stretch or measure. So let's think about the ETF for a second, right? A lot of us either thought it was a sell the news event or a God candle to the moon event, which, I mean, it kind of sold off. Not really, though. That was more of like a grayscale thing. That was kind of like an isolated event, in my opinion. I don't think that was like a buy the news or buy the rumor, sell the news event. I think that was isolated based on whatever the hell they're doing strategically. That's their own shit. I don't understand it. I'm not smart enough. But with them selling off, people are still accumulating in the ETFs. With that being said, what we are seeing now is a steady increase in price every day. Now, that might happen for the next 4 or 5 years, which would be bananas. You know, that's kind of something I'm seeing people talk about right now. Is that we didn't get this God candle, and we didn't get a huge sell the news event, but we might just get this steady, consistent inflow of TradFi money over the next several years. I guess you got to kind of look at it this way. These are people that are calling their financial advisors, that are calling the people who manage their money and saying, they're not even saying, guys, it's not like us. It's not like I want to $5,000 at Bitcoin, buy $5,000 worth of Bitcoin today to hope to get a 30% gain and then sell. No, these are people that literally have managers, people that manage their money, and they're calling them and going, hey, Bob, down at I Trust Shares or down at BlackRock, whatever, I would like to allocate 5% of my portfolio to the Bitcoins, the Bitcoms. And they do that. And they sit on it for the next 10, 15 years. And then tomorrow, Bob wakes up and notices that he bought it 48, and that buy he put in went up 8%. And he goes, holy shit. So he calls dude again and says, look, I want to buy another 10% of my portfolio of the Bitcoins. And that continues to happen. And then that dude calls his friend and goes, hey man, you need to get in on this. It keeps going up. And the rumor spreads, and these TradFi people keep hearing about Bitcoin continuing to tick up every day. Let's look at it on the daily too while I'm telling this just fabricated story off the top of my head. This hypothetical story. I mean, look at the consistent. Once we broke out of this triangle, this is what I'm talking about. Every day. So we had the first 3% move. Okay. Then we called Bob down at fucking BlackRock. Excuse my language. Bob, I want to allocate 5%. Cool. And we went up roughly another 3%, pulled back a little bit. Another 3%. This is what I'm talking about, guys. And then we'll call Mike, the guy who's allocating his portfolio. Mike calls Chris. He goes, dude, Chris, get in on this. And the next day, 4%. And then the next day. No, do you see what I'm saying here? Anywhere from 3 or 4% kind of on the daily for the last 1, 2, 3, 4, 5, 6, 7, 8, going on our 9th day, guys. That's what I'm kind of thinking is happening, and could continue to happen. It's not a far-fetched thought process. While people continue to, the traditional finance people continue to allocate portions of their portfolio to these spot ETFs, so they can get some kind of exposure to Bitcoins. Sorry to be a fool right now. I haven't finished my coffee yet, so I'm kind of like not really putting thought process together very well, but I think you get my point. So the narrative I'm seeing people start to talk about is that this could potentially be what you're looking at for the next 3 to 5 years before we get like a crazy market correction or something like that. As well as, let's go to let's look at the 30. Look at the Dow Jones. Oh, we actually had a pullback yesterday. Interesting. S&P not looking as bad. What's the dollar doing? A little pullback on the dollar. Yeah. Doesn't always correlate, I guess. Anyway, my point is this isn't what we were all kind of expecting, but slow and steady, I'm not too mad at it. I definitely want to see some kind of chill, though. Honestly, I do. And look, maybe I shouldn't be fearful. Maybe I should be like way bullish and just be like, this is just, I mean, look how steady these look. Rip, sideways, rip, sideways, rip, sideways. Again, it'll be interesting to see what happens when the traditional market opens up and these guys wake up again to Bitcoin being higher, and see if they just start dumping money in it again. It's a very intriguing thought process to see what this will do. Outside of that, let's look at ETH real quick. ETH has finally given us some kind of gains. ETH looking kind of steady too, believe it or not. wasn't following Bitcoin for quite some time, but now it's starting to get there. But rip, sideways, rip, sideways, rip, sideways, rip. This is where it's starting to look like regular crypto again. We'll see what happens. But it's good. Good momentum, market movement, etc., etc. Finally came out of this nonsense. But yeah, man. Every time I think we're gonna get a pullback, we just kind of tick sideways and then pump up just to that next level. So that's what I'm looking at, guys. But I hate this. I hate to say this. This is crypto. We could wake up and see one of these. Don't ever think that can happen in crypto. Ever, ever, ever. Kind of well done for Market Cypher, though, too. If you're playing the 4-hour, just on this ribbon alone, and you played this cross right here and stayed in, just when it flipped, 30% move for you. 10x leverage. You're looking at a 300% gain. 10 isn't. I'd say outside of 10 is when you start to get super degen, but 10% or 10x leverage ain't too terrible. Ain't too degen. Anyway, I think I'm spending way too much time on this. I think you guys get my point. I would be happy to see a cool off period. I would be happy to see a little bit of sideways and then a rollover back to 50 and bounce. That would make me feel a lot more bullish. Right now, I'm just fearful. I guess I got bear market PTSD a little bit. Doesn't everybody? All right. Outside of that, guys, if you do have any questions or any ideas, if you see something I don't, if you want to talk about, different ideas, different things you see, different narratives when it comes to the market, guys, by all means, reach out. Reach out on X, just at boringcrypto.io, or reach out here. We can chat about it. I'm always open. I'm not. Again, I always say it as a joke, but I'm not the best trader. I'm not by any stretch or measure. I'm not even a good trader. I'm just some dude in a room staring at lines on the screen. Microsoft Paint, y'all. All right, that's enough. On to the news. Ether ETF verdict. Gensler stays muted. Yeah, not a big surprise. Anytime he's grilled about anything besides Bitcoin. Well, you know, if the laws say it's true, it's clear. That's Mr. Gensler. SEC Chair Gary Gensler made no hint of the agency's plan regarding the Ether ETF applications. During his Squawk Box interview with CNBC on February 14th, the United States Securities and Exchange Commission Chair Gensler gave little away about spot Ether ETFs. When quizzed about it and when a decision might be issued, Gary simply indicated that the process would be handled in precisely the same way as Bitcoin ETFs, revealing nothing about the current status or a possible time frame. I am the kind of guy that reads into this and goes, they're already going to prove it, but they're probably going to push it as far as they can, just like they did with Bitcoin. The Securities Agency delayed its approval decision on the Invesco Galaxy Ether ETF on February 6th. The SEC also delayed its decision on Invesco ETF application in December. The SEC has also postponed decisions on other ETH ETFs applications, including filings from Grayscale, Fidelity, and BlackRock, the world's largest asset management firm. Other firms vying for ETF approval include VanEck and Hashdex. Franklin Templeton was among the latest Wall Street firms to submit an S1 filing for a spot Ether ETF on February 12th. The $1.5 trillion asset manager giant signaled its intention to stake a portion of the ETF's ETH to generate additional passive income, similar to ARK 21 shares, revised filing. Will spot Ether ETF be approved in 2024? The SEC must decide on VanEck's application by May 23rd. Sorry, guys. ARC 21 shares by May 24th, Hashdex by May 30th, Grayscales by June 18th, and Invesco's by July 5th. Fidelity and BlackRock's application must be decided by August 3rd and August 7th, respectively. Bloomberg ETF analyst James S. expects a simultaneous decision on all outstanding Ether ETF applications by May 23rd, which is similar to how the SEC approved all spot Bitcoin ETFs on January 10th. Yet Bloomberg ETF analyst Eric Balkunas has recently lowered the likelihood of a spot ETH ETF approval in 2024 from 70 to 60%, according to a January 31st ex post. If Gensler really wants to, he can kick the can down the road. There was no more can kicking for Bitcoin ETF applications. As for Bitcoin ETFs, BlackRock, iShares, Bitcoin Trust, IBIT amassed 105,280 Bitcoin under management on February 13th, making it the first spot Bitcoin ETF in the United States to surpass the 100,000 Bitcoin mark. That is crazy. Moving on, Debtbox counters SEC's bid for dismissal, alleged strategic maneuver. Debtbox argued that the SEC's move to dismiss is an attempt to receive special treatment in federal courts over the entities it regulates. Software firm Debtbox is asking Utah federal judge to deny the United States Securities and Exchange Commission motion to dismiss controversial enforcement action against it. In a February 14th filing, Debtbox characterized the SEC's move as a strategic maneuver to evade possible sanctions and permanent dismissal due to alleged misconduct. Get them. The SEC submitted a motion to dismiss its case against Debtbox on January 30th, expressing its intent to assess the evidence in the case and understand the factors that might have led its legal representatives to initially make inaccurate statements to the court. However, Debtbox argues that the SEC's readiness to dismiss the case without prejudice is a strategic move to evade sanctions and possibly initiate a revised version of the enforcement action free from misconduct allegations. Or trying to cover their ass. That's what they're saying. They're trying to cover their ass and then submit another lawsuit against Debtbox. That's what they're saying. The SEC wants to exit this action under its own terms while retaining the option to refile another enforcement action against the Debtbox defendants and other defendants at some undetermined time in the future, and perhaps in a different forum, as if nothing happened in this case, but something did happen in this case. I agree wholeheartedly. Debtbox claims the SEC's move to dismiss is an attempt to receive special treatment in federal courts over entities it regulates. It highlights the SEC's dissatisfaction with promises to restructure teams or offer more ethics training when businesses are accused of misleading investors. The filing comes after the SEC's late December 2023 acknowledgement of making inaccurate statements to the court. Earlier in the case, Judge Robert Shelby previously criticized the SEC's lawyer and directed the agency to clarify false or misleading statements that the company sought to relocate assets overseas and evade regulatory jurisdiction. However, Shelby found that the SEC misrepresented the situation. In response to a court order, the regulator changed its legal representation, committed to internal training, and sought a temporary dismissal for an internal review. Debtbox also requested that the scheduled hearing on March 7 proceed as planned, despite the SEC's request for cancellation. In the early stages of the case against Debtbox and its promoters, the SEC secured emergency measures alleging the software firm defrauded investors of at least $50 million by selling unregistered securities in the form of licenses for software that claimed to mine digital assets linked to real-world industries. The SEC won a temporary restraining order to freeze Debtbox assets on August 3rd, 2023, claiming the firm would remove evidence and secretly transfer assets overseas. If it was notified, the order would be imposed. Doing shady shit, guys. They're getting caught up in it. Get them, Debtbox. All right, moving on. Ether staking deposits touch 85 billion, 25% of circulating supply now locked up. What does that mean? I don't know. TVL is at 25%. Okay. Amid growing staking demand, the price of ETH has made significant strides, reaching a new yearly high above $2,800. Total amount staked. Ether in the Beacon chain has reached 30,206,801 ETH, which is worth over $85 billion, locking up nearly 25% of the total circulating supply. There are currently 943,974 active validators on the Beacon chain. February has been a bullish month for the Ethereum network so far. Between February 1st and 15th, investors deposited 600,000 ETH into Ethereum 2.0 staking contracts. February also saw the ETH price surge to yearly highs over $2,800. Ether is trading at $2,774 at the time of writing, and as of right meow, bear with me, we are at 27.86, about $10, a little over $10. A quarter of the circulating supply locked in proof of stake contracts is seen as a bullish sign for the Ethereum network. The rise in staked ETH adds to the network's security and efficiency, and it reduces the supply of ETH available to trade on exchanges, leading to reduced supply amid growing demand. The Beacon chain introduced POS, not to be confused with piece of sheet, to the Ethereum ecosystem when it merged with the original ETH proof of work chain in September 2022, allowing validators to stake ETH. Currently, ETH stakers get an annualized rewards rate of 4% on top of price go up. This is why I think a lot of the fund management companies want a spot ETH ETF. The ETH POS network is run by a group of validators which had to stake 32 ETH. The Beacon chain started with 21,063 validators, but currently boasts over 900,000 validators. After the Shanghai upgrades in April of 2023, validators could withdraw their staked ETH, with several critics believing there would be a high demand for withdrawals by validators. However, within a week of the Shanghai upgrade, the amount of newly staked ETH outpaced withdrawals, indicating validators were restaking their ETH for passive income. Get it. The price of ETH has railed in the past few weeks, making double-digit gains and eyeing the $3,000 mark, with spot Bitcoin ETFs now approved in the United States. Attention is turning to spot ETH ETFs and whether the U.S. Securities and Exchange Commission will also approve them. Spot ETH ETFs could have significant impact on the second largest cryptocurrency, with institutional demand for ETH adding to declining market supply. Again, with the staking too, they're if they can get this through, they're double dipping in large amounts, but in a positive way that will a price positive way, if that makes sense. It's not just a buy shares, we short, we long, we don't care. It's we buy, we stake, you buy our shares, and we just continue to stake more and make more money. It's a very intriguing process. So we'll see. Let me know what you guys think. Comments down below. I'm still trying to wrap my head around this stuff a little bit. And last but not least, crypto played little part in Hamas terror financing. U.S. Treasury. You fucking think. God, I can't stand these people. Headlines, guys. They don't give a shit about you. They don't give a shit about your money. All they care about is getting votes, getting their agenda passed, headlines. That's it. Palestinian militant groups, including Hamas, still prefer quote-unquote traditional products and services. Cool. So we put should we put sanctions on the dollar? Because that's what they're using. They're using dollars you send to them, or they send to them. You get my point. Traditional products and services, says U.S. Treasury official Brian Nelson. Cryptocurrencies accounted for only a small part of the funding for militant groups, Hamas and Palestinian Islamic Jihad, and an earlier report claiming the group received tens of millions of dollars in crypto was inaccurate. We all know this. The general public reads this shit and believes it. Way to go, you assholes. United States Treasury official said the numbers noted in the Wall Street Journal piece talked about wallets, but not necessarily the disaggregated Desegregated? Is that desegregated? I can't read. Not necessarily the desegregated amount among all its customers. The Treasury the Treasury's Undersecretary for Terrorism and Financial Intelligence, Brian Nelson, testified on February 14th before the House Financial Services Committee, seeking to clarify. Guys, my nose and my throat are so stuffed up and messed up. Not only can I not read on a regular basis, but it's making it even worse. I can't enunciate or pronounce words. Seeking to clarify, Representative Tom Emmer asked if the reported amounts were what people had in their wallets as opposed to what was specifically going to the Palestinian Islamic Jihad and Hamas. That's what we think is most likely, Nelson said. We also assess that terrorists still prefer, frankly, to use traditional products and services. Tom Emmer, today I asked Treasury's head of FinCEN and OFAC about the Wall Street Journal's reporting on Hamas digital asset fundraising campaign. Undersecretary Nelson confirmed on the record that the Wall Street Journal's numbers were inaccurate and that crypto was not even a popular tool for Hamas terrorists. I hope people are reading this. This stuff never gets out to the general public, though, unfortunately. Tom Emmer again, senators are writing legislation based on the Wall Street Journal's inaccurate reporting. Since Treasury has accurate data, it has an obligation to correct the record on the size of Hamas's digital asset fundraising efforts, but only after tons of senators and political bodies came out attacking crypto based on a Wall Street Journal headline, as well as Elizabeth Warren pushing bills through Congress based on a Wall Street Journal headline. It's fucking sad, guys. The Wall Street Journal partially corrected an October report claiming Palestinian Islamic Jihad and Hamas received $93 million and $41 million respectively between August of 2021 and June of 2023. Palestinian Islamic Jihad figures were revised to $12 million after blockchain analytics firm Elliptic, which provided the data the journal cited, rebuked the report, saying there was no evidence to suggest that crypto fundraising has raised anything close to this amount. Over 100 U.S. lawmakers led by Senator, who did I say? Elizabeth Warren, have used the journal's report to drum up support for... God damn it, these people suck. This is what I just said. To drum up support for legislation under the guise of national security to curtail illicit crypto use. The crypto industry has pushed back, claiming it would have little effect to drive the industry offshore. Guys, it's not even about that. They're using this to find ways to control you and your money. That's really what's going on here. So they can see everything you do, know exactly what you spend everything on, and control it and shut you down at any point in time. And it's sick. I hope people are waking up to this shit. Sorry for being sick. Sorry for being worked up. Sorry for not being able to read. At the committee hearing, Emmer questioned the amount of crypto the groups were able to retrieve, in which Nelson responded, "We don't expect the number is very high." It's so small, they're too embarrassed to even say what it was. To be clear, Emmer prompted Nelson, Hamas is using crypto in relatively small amounts compared to what's been widely reported. That's correct? That's our assessment. Yep, Nelson answered. Emmer then asked if the Treasury has a responsibility to correct the record on crypto and terrorist financing, as quote unquote, we have senators who are legislating on these false figures, quote unquote. Nelson responded that the Treasury was monitoring terrorist use of cryptocurrencies. His earlier prepared remarks had asked Congress for quote unquote additional tools and resources to root out illicit finances financed by players in virtual asset markets. Guys, fucking politicians, man. Anyways, you get my point. They're using bullshit narratives to push laws that give them more power and control. That's all. I mean, baseline, that's all it is. Yeah. Anyways, let me know what you guys think. Comments down below. I'm sorry for slaughtering the articles today. Let's look at Bitcoin one last time. We've got about 2 hours before the traditional market opens up. We're beating our heads on that 52,373 though. If we just open up another candle, then we can't get above it. Let's look at the 7 minute. 7 minute is just ranging in there, guys. Look at that. Let's see what happens. Alright, y'all. I think it's a long enough video. If you do enjoy the content I provide for you here every morning on Boring Crypto IO, please by all means, guys, subscribe to the channel. Turn on the bell for notifications so you know when I do post videos. Watch the videos. Share the videos on all your social platforms. And above all, if there's anything you can do to help spread the adoption of crypto and help grow the channel, guys, please by all means, like the videos. It's freezy peasy lemon squeezy. And I'll see y'all bright and easy tomorrow morning. I am out of here.